India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live as always from the CNBC TV 18 Motilal Oswal studios. Markets are going to be looking better, I think, because global market handover is very, very positive. I'm Prashant. With me, my colleagues Sonia and Rima is with us here on the program today. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Rima. Well, there's been a huge rally on Wall Street, right? I mean, it hasn't helped us so far in the last many days. But let's see, hopefully today is that day when, the markets sort of use that little bit of a bump up.
Well, one of the CNBC anchors said this is a banner day for the US markets with stocks surging, yields declining on the, little cool off that we've seen in the inflation. So banner day was what was the term used.
And let's see if we have a banner day here. We manage that, right? Because last few days has been kind of disappointing because the market comes up and it is up 50, 60 points and it sells off. Yesterday was a case in point, something very similar that we had. Let me just begin by telling you where we kind of left off yesterday and what you need to know. So, as we were discussing, very strong cues from overnight markets, and not just from one market, but you look at the equity market, the rates market, the dollar market, that's a currency market. I mean, it's kind of flashing green across, right? So Nasdaq was up about 1.4%. The S&P was up about 1.25, 1.3%. You had inflation numbers. Basically, there were two data points. Inflation numbers came in at 0.29% growth. That's the core CPI number in the month of April. That was in line with consensus. So markets should not get too excited about that. Well, they were not. But then there was also the retail sales data for the month of April, which came. That was weaker, right? And that essentially, the combination of these two was read pretty dovishly by the market. When I say dovishly, essentially expectations that growth is kind of starting to slow off, inflation is coming off. I mean, that is essentially the combination which the market really liked. By the way, some are still talking about that stagflation scenario. The inflation remains not very, it's not low. I mean, it's in line, whereas growth starts to weaken a little bit. Last time, of course, a reporter asked Fed Chair Powell that question about stagflation. He very uncharacteristically said that I don't see a stag and I don't see the inflation as well. So, that's where we are at. But it's not gone away, that debate. What was the market reaction? Pretty big. The 10-year yield lost 9 basis points. We were down to 4.35%. The dollar index lost, almost 1%. That's a pretty large single-day move, right? 104.21 is where the dollar index is at. We'll put out a chart for the yields as well and the dollar as well. These are significant breaks that we've seen and perhaps, herald another sort of leg down, a phase lower, hopefully. Did Fed implied rates in terms of what the market is betting on for the Fed to do in July change very much? It did not. That stands at about minus 7 basis points. Bulk of the expectations are concentrated in for later, sort of, for example, in September and what the Fed will do there then. Oil prices, they inched up back to where we're at about $83 a barrel, nothing very large. We've been sort of yo-yoing between 82 and 83 for some time now. So that's the global setup, and it's a pretty positive, good setup. Now to the local data point, and I just want to sort of highlight this indication before I get to the levels. FIIs in index futures are pretty much at record short levels. They're not at an absolute low. The low that we've seen, we've also, by the way, had 3.5 lakh short contracts from FIIs. That was back in November of 2023. But we are, in a way, at the first level, almost 2.5 lakh contracts net short from FIIs. On the opposite side is what you call client segment. NSE gives you data on what clients are doing, and this is nothing but HNIs and family offices, basically quote unquote smart money. They are net long 2.7 lakh contracts, and that is near a record high. So you have essentially FIIs who are net short, and you got clients and HNIs locals who are net long. And this in the past has resolved in the favor of local sort of smart money. And FIs eventually start to cover. There is, of course, also you throw in the other angle, which I just spoke, which is the global outperformance we've had for the last 1.5 odd months. And I think we just have to bide our time because you've got this local election event. And once that is over, or maybe even going into it, some of this starts to unwind. That's where we are at not exactly the worst sort of position in the world to be in. Levels here for the Nifty in the very near term. The resistance stands at yesterday's high, which is 22,297. We left off, it's about 100 points away from where we are. The 20-day stands at 22,320. That's the level above, all within the vicinity of about 1.25%. And then the 61.8% retracement of the fall is 22,422. Basically, from here all the way to about 22,400, you got these resistance levels. Bank Nifty crossed the 40-day exponential but could not close above it. So that becomes a natural first resistance, which is 47,840, very close by. And then the first high was 47,957. And then the 20-day comes in at 48,164. These are levels where the market will test. And the price action has got to show us that it's willing to cross these levels. And then we kind of start to talk about the fact that maybe this downdrift is over and the market is looking a little healthier, a little better. GIFT Nifty will come up on your screen. It should be a positive kind of a start, 90 points higher. And I think today, more than the last couple of days, I think we should be able to hold on to the gains and not sell off like we've had happening in the last few trading sessions or so. Sonia.
Absolutely. And the good part is, if you realize that after all this volatility, the market is back at that 22,300 mark. So it's not given up on its uptrend. It perhaps saw a bit of a pause for a few days, but now it's back at those high levels. But yes, it is, after the recent pullback, it has been consolidating. The Nifty has been facing a bit of resistance around the 22,300, 22,400 mark. So let's see how that goes from here. But there was a huge rally on Wall Street, as we've been saying, post the inflation data that came through. The S&P 500, in fact, closed above the 5,300 mark for the first time ever, and the Dow was up in the green. So hopefully we'll be, jumping onto that bandwagon today. The FI selling as well, although in our own markets it continues unabated. The amount is lower than what we've seen in the preceding 2 days. So yesterday, FI sold about 2,800 crores. On an average, they've been selling 4,100 crores in the preceding 2 days. So that at least is a positive sign. But I want to talk about a couple of stocks and themes that are in focus. One is, yesterday you had the Aadhaar Housing Finance listing. Now, although it was a subdued listing, it's on the radar of many influential investors. HNI investor Akash Bhansali bought 45 lakh shares on day one. And now Aadhaar Housing Finance is the cheapest actually amongst the entire housing finance space, if you look at the valuations. So it would be very interesting to see if there is fresh buying after the kind of subdued listing that this company saw. No problems with the financials, robust growth, etc. Adani Ports is the other one I'm looking at. The management has guided for 5 years of double-digit growth. So you'd perhaps want to keep that on your radar. But the big theme that I'm watching after earnings season is the return of rural demand. And almost every FMCG company, that came out with their numbers indicated that the rural demand is recovering. In fact, some companies even spoke about how rural is growing ahead of urban. That's what Colgate said a couple of days ago. So whether it's Hero MotoCorp, Colgate, Dabur, they spoke about a recovery. HUL said that there are green shoots of recovery in the rural market. Berger Paints will definitely be a stock in focus this morning because they reported almost a 14% volume growth in Q4. And we know that, they as well have a large exposure in Tier 2, Tier 3 cities. And in the NBFC space, Shriram Finance a couple of days ago said that the rural credit growth is quite good and the asset quality has also improved. So this is one pocket that I'm really looking at because A, of the underperformance that these stocks have seen, so perhaps there's headroom for growth, and B, because of a recovery in rural demand.
No, absolutely. Just want to put on board some of the cues for the day. One, today is the Nifty weekly options expiry. Two, as Sonia pointed out, the FI selling continues. Less compared to the prior day, but yesterday, 2,800 crore of selling, taking the monthly tally to more than 36,000 crore rupees. FIs have sold for every single day in the month of May. Also yesterday, IMD has said that the southwest monsoon will hit Kerala on the 31st of May. So monsoon is pretty much here, and by 15th of July, it should cover the entire country. Day 2 of the Go Digit IPO, and on day 1, it's seen a subscription of close to about 36%. Some levels on the Nifty, on the way down, it will be 21,821, which was the low on Monday, and on the way up, the 21 DEMA, 22,300. In big earnings today, in the Nifty pack, there's only one, M&M, but a lot of F&O companies like Biocon, Gale, HAL, InfoEdge, Concord, all of them will be reporting their numbers. But we've seen a pretty fantastic recovery from the lows this week. On Monday, the intraday low on the Nifty was 21,821. 21,821. So from that level, we've seen a recovery of close to about 380 points. And look at the way PSUs have bounced back. This week, The PSC index is up close to about 3.5%, but top honors go to the metal index with a gain of close to about 4.5%.
Okay, so let's see. The implied opening is suggesting a big opening of about 100 points up move. So I think we have our hands full with some positive cues this morning, but let's see how we take it from there. Here is some commentary coming in. First up, on the equities front, Chetan Seth of Nomura says that moderating US inflation and soft retail sales should bring a relief for Asian stocks in the near term. He sees a relief rally in Asian stocks and it may even overshoot the fundamentally derived fair value index targets. Chetan adds that emerging Asian stocks would welcome an environment of a softer US dollar and moderating US bond yields as concerns for higher for longer should ease in the near term.
Okay, some money market views here. This is on the rupee. Parul Mittal Sena of Sansi, who says that USD INR has been in a very tight range this entire week amid low volatility given an inline expected US CPI and a weaker US dollar. She expects the rupee to trade in a range of between 83.3 to 83.6 to the dollar. Global cues and state-owned bank actions will remain important drivers for the rupee till election results are declared.
Okay, and on the bonds, Parul says last week India rates drifted lower, driven by a down move in global yields. India's inline CPI at 4.83% and liquidity supporting measures via the RBI's repo auctions also helped. In the absence of domestic cues, Indian bond rates are likely to move in line with global rates, which has declined post the US CPI. And she expects the 10-year benchmark yield to move in a range of 7 to 7.1% over the next week.
And we have lots of stock-specific action to track today, and we'll get to it in just a bit. In our special Top 10 segment, we're looking at M&M, Mankind Pharma, Dixon Tech, IEX, NCC, Honeywell Automation, and Titagarh Rail Systems. These are stocks with positive news flow. But on the other hand, Berger Paints, NLC India, Jindal Stainless are stocks on our radar that are likely to open in the red.